800 billion disappeared. Tesla is on the verge of collapse. In the heart of Silicon Valley, the once mighty titan of electric vehicles, Tesla, found itself at the precipice of a dramatic decline that sent shockwaves through the financial markets. Just 6 months into the year, the electric car giant had witnessed a staggering loss of over 50% of its market value, translating to an eye-watering $800 billion decrease in market capitalization. The news was relentless. A sharp 15% drop in shares in a single day, followed by an additional 3% loss in after-hours trading. Investors, once buoyed by the promise of a sustainable future, were now gripped by panic and uncertainty. The roots of this unprecedented crisis ran deep, entwined with a rapidly changing competitive landscape that was increasingly hostile to Tesla's dominance. China, a crucial market for electric vehicles, had begun to flex its economic muscles, implementing a new 25% import tax on American-made vehicles, a move that targeted Tesla directly. This strategic maneuver was not merely a financial blow, it was a clear signal of China's intent to protect its burgeoning electric vehicle industry. With local manufacturers like BYD rolling out affordable models such as the Han EV, priced at an enticing $30,000, the competition became fierce. Tesla's Model 3, retailing at $43,000, suddenly seemed less appealing to cost-conscious consumers. In 2023, while BYD captured a remarkable 25% of the market, Tesla's sales dwindled to a mere 350,000 units. A stark reminder of how quickly fortunes could shift. The decline wasn't just confined to the Asian markets. It was a global phenomenon. In the United States, Tesla's market share plummeted from a staggering 79% in 2020 to a mere 54% by 2023. This erosion was compounded by a 30% decline in sales across Europe, where competitors were no longer just emerging but thriving. Rivals were not only matching Tesla's innovations but were also offering models that appealed to a broader demographic. The allure of the Tesla brand, once synonymous with cutting-edge technology and sustainability, began to wane as consumers explored alternatives that promised similar performance at a fraction of the cost. Adding to the turmoil was the increasingly controversial figure of Elon Musk, whose political remarks and public behavior began to alienate a loyal customer base that had once viewed him as a visionary. His forays into social media, where he often espoused polarizing opinions, did little to foster goodwill. The brand that had once represented hope for a cleaner future now seemed embroiled in distractions that detracted from its core mission. As loyal customers began to question their allegiance, competitors seized the opportunity to position themselves as the more stable, reliable choice in a tumultuous market. Amidst this chaos, the financial statements from Tesla began to raise eyebrows. Rising costs of materials, coupled with declining demand, painted a troubling picture for investors. The once promising forecasts that had driven stock prices into the stratosphere were now replaced by grim projections that suggested a company struggling to maintain its footing. Panic set in as investors, once enamored with the idea of a green revolution led by Tesla, began to question whether the company could navigate through this tumultuous phase. The narrative of Tesla's decline was not merely a tale of market dynamics. It was a reflection of a broader struggle within the electric vehicle industry. The promise of electric mobility had attracted numerous players, each vying for a piece of the pie, and as the competition intensified, the stakes grew ever higher. Tesla, which had once been the undisputed leader, now found itself in a precarious position, forced to innovate at an unprecedented pace to keep up with the likes of BYD, Rivian, and other emerging brands that were quickly capturing consumer interest. As the crisis deepened, critical questions loomed large over Tesla's future. Could the company adapt to the shifting tides of the market? Was it possible for Tesla to regain its footing amidst a sea of competition that seemed to grow fiercer by the day? Investors and analysts alike pondered whether the company would be able to reclaim its status as the leader in electric vehicles, or if this marked the beginning of the end for what was once hailed as the future of transportation. In boardrooms and trading floors, discussions turned to strategies for recovery. Some suggested a re-evaluation of pricing structures to better compete with the likes of BYD, while others advocated for a renewed focus on innovation and technology to recapture consumer interest. The idea of expanding production capabilities in China to mitigate the impact of tariffs was also floated. But the feasibility of such moves remained uncertain. As the dust settled from the initial shock of the market's reaction, a more profound realization began to take hold. Tesla was at a crossroads. The company had to confront the reality of its situation and decide whether to double down on its existing strategies or pivot to new approaches that could reinvigorate its brand and restore confidence among investors. The road ahead was fraught with challenges, but it also held the potential for renewal. In the end, the narrative of Tesla's decline served as a cautionary tale for the electric vehicle industry and the wider market. It underscored the importance of adaptability in a fast-evolving landscape and the need for companies to remain vigilant against the threats posed by competition and changing consumer sentiments. As the world watched, the question remained: could Tesla rise from the ashes of its own making, or was it destined to become a relic of a bygone era in the quest for sustainable transportation? The answer, as elusive as ever, hung in the balance, waiting for the next chapter to unfold.